Hi, Money Guys. I'm 24, graduating from graduate school. No debt besides student loans. My undergraduate loans are low interest, so I'm not worried about that. But my graduate loans are 8%. Should I focus on paying those down as soon as possible or focus on putting that extra money toward investment accounts?
Bo, this is good. What's funny is that we just had a Making a Millionaire episode where the person, and this is such an interesting thing about student loans, is they're usually siloed in the different years that you went to school. They're not all the same.
That's
so it's
right.
okay if you don't have to say student loans and it's
Have to
all
tack 'em
under
all.
one big
Yeah.
umbrella. I've heard you talk about this before. It's okay if you kind of look and silo those different debts.
Yeah, Christian, as I'm thinking about your situation, I'd list out all my loans, all my undergraduate loans, all my graduate loans, and I'd have them by outstanding balance, and then I'd have my interest rate. And I would sort them by high interest to low interest. And if you do have some of these graduate loans at 8%, I'm going to argue, for someone even in your 20s, 8% is pretty high interest on a student loan. So there's a really good chance that when you think about the how powerful your dollars can be, if every single dollar can return to you an imputed 8% rate of return, that's pretty solid. So I would think I would probably prioritize really knocking those down. But as I begin to knock down those high interest graduate loans, and I begin to move to some of these lower interest undergraduate loans, the loans for someone in their 20s that are like under 6%, then I'm thinking, okay, well, I don't have to be super aggressive. I can just sort of pay on these at a reasonable fashion, but then I can let my dollars begin working for me. And if your graduate loans are something that maybe you could knock out in the next 2, 3, 4 years, you're still going to be a 27, 28, 29-year-old who has incredibly powerful dollars. You can go to moneyguide.com/resources and check out our wealth multiplier tool. Even at 29, your dollars have the ability to be so powerful. It can grow so much that even though you missed a little bit of time knocking out that 8% debt, you can still make it up later on. I think that's the way that I would go about thinking about it and attacking it if I were looking at the student loans.
And I love that the content team, because they, obviously we had some little struggle pulling up the foo earlier, but man, they just flexed.
They got to quit.
They just flexed on bringing up that wealth multiplier. If you're not going out to moneyguy.com/resources and looking at some of the free tools and resources we put together, I think you're missing out, because we really do try to accelerate your journey. Because as Bo shared earlier in today, we don't think everybody needs a financial planner right out of the gates, but I do hope that you'll come take advantage of all of our free stuff and then get so successful that you get so complicated that the success creates the need for some good financial planners, and you'll remember us.
And I'm hoping, and look, this is not always the case, but Christian, I'm hoping you did the work to say, okay, I'm going to go to graduate school. I'm going to get this advanced degree. And what this advanced degree is going to do is going to allow me to earn a higher income sooner. If that's the case and your shovel's able to get bigger earlier on in your career, hopefully that's going to equip you to be able to knock out these student loans more quickly than someone who was not able to have that same vertical mobility in their income. You hope that that's the way that it goes. If it is, then the graduate degree was a positive ROI endeavor, and it's going to hopefully put you in a great place financially over the long term.